The end of the year just around the corner, and we thought it would be a great time to look at some of 2023's winners and losers. And with some big divergences between arch rivals across industries, we wondered which would you rather add to your portfolio. We're looking at them all, from discount retailers to streamers to autos to industrials, and let's play the game. First up, retail. Walmart popping almost 10% this year, while Target is down more than 6%. Would you rather Walmart or Target? Tim, you go first.
This is would you rather. I own them both. I would Walmart over Target here just because Target has clawed back 41 points between the two companies in the last 6 weeks. I mean, it was so oversold on a pair basis, and these are two great pairs to trade. You saw Target wickedly outperform for a couple of years before. Walmart has dominated 65% outperformance. It's a 41% move off that bottom 6 weeks ago for Target. I own Walmart here.
Karen, your thought? Would
yes,
you rather
this is
Target
a tough one. I own them both, but I also had on the pairs trade long Target, short Walmart, just because the discrepancy in the price to earnings, we might have a chart of that, or it might have already just been up. I'm not sure. Yes, there it is. Was so wide. See how wide that was?
Look how wide
and now
is.
Look how narrow it is. And so it's time to take that trade off. A Target is cheaper, but Walmart deserves to be more expensive. This is a super tough one. I will just talk my book, though. I am long. More Target than Walmart.
More Target than Walmart. All right, next up, the streamers. Netflix soaring almost 68% this year. Meanwhile, Disney up just 8%. Would you rather Netflix or Disney, Dan?
I'd probably rather Disney. And one of the reasons, Bob Iger's back at the company, a lot of initiatives, a lot of moving parts right now, let's be clear. But I think the fact that you have Nelson Peltz from Trian, he's still trying to agitate for some change. They just added James Gorman of Morgan Stanley to the board. I just think that something probably positive happens between Iger and Peltz in the new year, and you might see some outperformance on a relative basis to a Netflix. I know there's a lot of people who think there's a lot of moving parts here, and it's really hard to value this company. But ultimately, if I had to play, would you rather? It's Disney.
It's Disney. Guy,
I'll play it, and I'll say Netflix. And I understand, listen, the biggest gripe I think about Netflix now is valuation. They're going to surpass Disney Plus in 2024 in terms of ad revenue, which is remarkable if you think about it, whereas Disney's problems are vast and robust. So if the only problem with Netflix is valuation, I'll stick with Netflix here.
All right, rather Netflix. Let's take a look at the automakers. Tesla up 108%. Dan mentioned it earlier this year, while General Motors is up about 6%. Dan, are you going to surprise us here? Which would you rather?
I'm going to surprise you, but I'm actually not going to play the game that well. So earlier this year, I made a really stupid comment on this show, and you could say, Karen.
Be specific.
Which one? Yes. Yeah. Okay. And it was something about, in 100 years, GM's still going to be around and Tesla's not. I think what GM did this year by dialing back their ambitions in EVs, and I think a lot of the labor issues, I think it's going to put traditional auto in a really tough spot. Now, that being said, on Tesla, I've been very bearish on the stock this year, and it's gone up a lot, as I just mentioned. So another thing that I've been wrong about. But the fundamentals have been bad, and I've been right on the fundamentals and the direction of their margins and kind of the market share issues and some of the issues in China and the like here. So next year, I actually think their fundamentals probably bottom out at some point early in the year. Tesla's do, but I think it probably happens from lower levels at some point, maybe towards 150 or so.
Karen, which would you rather?
Mine, I'm sort of a valuation girl, so GM, but I actually did sell my GM recently just because I just sort of gave up on the EV transformation, and Cruise is, a lot of things going wrong over there. It is cheap. It should be cheap, but and Tesla is expensive, should be expensive, but too expensive for me. So neither.
Would you rather is neither.
It is neither. Sorry.